Today, financial disclosures show Donald Trump owns more than $1 million in crypto. A new report shows the value of crypto hacks surged so far this year compared to the same time last year. And Framework Ventures' Vance Spencer breaks down crypto VC trends. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Digital currencies are in the red as we head into the weekend. By noon Eastern, Bitcoin fell more than 2.5% to just above $58,000. Ether dropped more than 3.5% to $25.69, while Solana sank 5.5%, back down to $137. Now, if we zoom out and look at the week, crypto is faring worse than Wall Street. Bitcoin has dropped nearly 4% in the past 7 days, and Ether dipped about 0.7% in that time. Solana has slumped 10%, while the S&P, well, it's up 3.8% so far this week. And speaking of Wall Street, a couple things you should know. The New York Stock Exchange has withdrawn a proposed rule change before the SEC that would have allowed the trading of options for Bitcoin ETFs. Now, this comes after the agency postponed a decision on that rule change just a few weeks earlier. Meanwhile, BlackRock's crypto ETF holdings have overtaken Grayscale's for the first time. According to analytics firm Arkham, BlackRock's on-chain holdings for its IBIT Bitcoin ETF and ETH-A Ether ETF have overtaken Grayscale's GBTC, BTC Mini, ETH-E, and ETH Mini holdings. BlackRock is now the provider with the largest collective holdings according to Arkham. Okay, let's talk about the top stories for today. Republican presidential nominee Donald Trump owns more than $1 million in crypto. That's according to a personal financial disclosure form released yesterday, which federal candidates and office holders are required to file. The former president's disclosure included details about a crypto wallet and virtual Ethereum key holdings that Trump valued at $1 million to $5 million. Of course, Trump's public position on crypto has shifted since he first took office, when he said digital currencies were scams. This election cycle, he has embraced a hands-off approach from the government, with his campaign touting that he's building a crypto army. The change in stance came after lobbying from the industry and signs that fostering the growth of crypto was popular among a segment of Trump's base. In May, Trump's campaign started accepting crypto donations, and last month, he was the keynote speaker at Bitcoin 2024 in Nashville, where he proposed a strategic national crypto stockpile. Next, a new report reveals the value of crypto hacks soared to about $1.6 billion in the first half of this year, as the prices of digital assets jumped. According to this report published by Chainalysis yesterday, while the value of funds stolen surged so far this year, the number of hacks rose only slightly to 149, up from 145 in the same period last year. Chainalysis notes that after a 50% drawdown in crypto value stolen in 2023 compared to 2022, this year has seen a resurgence of hacking activity, with the average amount of crypto stolen per heist increasing by almost 80%. Chainalysis attributes the increase partly to the rise in the price of Bitcoin, which accounted for 40% of the total transaction volume associated with these heists. Crypto thieves also seem to be targeting centralized exchanges rather than prioritizing DeFi protocols, which are less popular vehicles for trading Bitcoin. Chainalysis says advanced cybercriminals, including IT workers linked to North Korea, are increasingly leveraging off-chain methods like social engineering to steal funds by infiltrating crypto-related services. The blockchain analysis firm points out that aggregate illicit activity on-chain has dropped by almost 20% year-to-date, which it says demonstrates that legitimate activity is growing quicker than illicit activity. All right, for our main story, Crypto World's Mackenzie Sagalos sat down with Vance Spencer, co-founder of venture capital investment firm Framework Ventures, to discuss markets, crypto regulation, and VC trends in the digital asset space.
So it seems like VC funding has been ticking back up since those bear market lows, broadly speaking, and we'll talk about Framework's portfolio in a minute, but broadly speaking, what are VCs most excited about in terms of investments in the crypto space?
A big focus is tokenization. So this is kind of the bringing of real-world assets on chain. You've seen BlackRock get into this, you've seen the smaller startups get into this, but this is a consistent theme for VC funds. You have gaming, and then people are just very excited about Bitcoin and ETH. Like, these things have tons of ETF flows. They're really starting to scale, and we've heard that they're going to be offered to major wirehouses in probably the next 2 or 3 months. So that'll be a second wave of these flows.
And we'll definitely talk about those ETF flows in just a minute. But with respect to the Bitcoin ecosystem in particular, I feel like earlier this year, there was all this excitement around L2 projects that were building, a lot of unprecedented deal activity happening specifically within Bitcoin. I was talking to other VCs about this. And part of that, I imagine, had to do with the momentum of runes coming after ordinals and just, more functionality on top of the blockchain. Has that momentum maintained itself, or have you seen, is there less excitement specifically in Bitcoin?
You know a lot about Bitcoin to throw those project names out there, but I think the momentum is sustaining. All of these projects have yet to really launch. And so we're kind of in like a wait and see type scenario for the next 6 months. But I think these projects are going to ride the wave of enthusiasm and flows from TradFi into both Bitcoin and ETH. And every cycle, people say that Bitcoin is the thing we're going to do this cycle, and nobody's going to go on any other chains, and we'll stay there forever. I just don't see that being the case. The world is multi-chain. Ethereum has a dominant L2 ecosystem. And so we see more excitement on the ETH side than Bitcoin, but those are kind of the two main horses for this cycle. And
specifically looking at your book, you do a lot of work in financial services. You've got some of the DeFi protocols that you've invested in, Aave, Chainlink. Talk to me about those investments and also perhaps any concern you have around the regulatory uncertainty as the SEC has been coming after a lot of these DeFi platforms as of late.
I mean, the bottom line with DeFi is that these are better, cheaper, faster financial services. They're available globally. And, most people in other countries don't have access to US dollars. They don't have access to, a borrow lend facility. They don't have access to the ability to swap one currency to the other. And so that's what DeFi is providing. And again, it's all based on ETH at the moment. Most of the stable coins, most of the financial services activity. But on the regulatory side, we see this getting better, not worse. I mean, there has been some lawsuits and, various projects are fighting the SEC in court. But I think having their day in front of a judge and being able to explain what they're doing is ultimately going to be positive for these projects. And, you've seen the SEC's track record in court. It's not great. They've kind of had a
lot of losses.
Right. And so can they string together a series of wins? I'm not quite sure. But these DeFi projects, they don't care about this. And not in the sense that they're breaking the law, but these DeFi protocols are just smart contracts. They're a code that executes autonomously. And as long as there's one person running the Ethereum blockchain, they will work. And so that's the beauty of crypto. It doesn't matter if the regulators or, if some other party tries to stop it. As long as there's people using it and running the software, it's guaranteed financial access to financial services.
Are you keeping an eye on how those cases go with, Robinhood's crypto division, Uniswap? You also have Consensus that's fighting the SEC, or is that really beside the point in terms of your investment strategy and how you think about next steps in that financial services corner of your book?
I mean, crypto has only ever existed in a hostile regulatory environment. Basically, from the jump, they've been trying to stop crypto, and I honestly have lost count of how many cases there are or who they're being fought by or for, but it doesn't really matter. I think what's coming down the pike is legislative clarity. Things like the Stablecoin Act, things like Fit 21. And if we get even one of those done, it provides a legal pathway for DeFi to exist. And it kind of, does away with all the court cases and even things like the Chevron doctrine being repealed. That's going to make it a lot tougher for the SEC and other regulatory bodies to really go after these DeFi protocols. But, if there's fraud, if there's scams, if there's people doing bad things, we want those taken care of. We just want a pathway for innovation.
You mentioned Fit 21. That's one of the competing bills that's making its way through Congress. Last night, we heard from Senate Majority Leader Chuck Schumer, and he said that he was confident that we could get one of these bills passed into law. Now, he didn't specify which one, but to have the Democratic lead kind of throwing his weight behind that, certainly a lot of people enthusiastic that we might see some clarity finally from Capitol Hill.
Mm-hmm. It's great that it's bipartisan, a little scant on details from Chuck, from Senator Schumer. But I think, people are coming around to the idea that crypto is not dying. The government has tried to kill it at various points. It didn't work. FTX happened, still didn't die. If it hasn't gone away by now, it's probably not going away in general. And it's time for legislative clarity. And
you mentioned those spot Bitcoin and Ether ETFs that were recently approved and launched just this calendar year. And that impacts your business. You have, $1.5 billion worth of spot crypto exposure. Talk to me more about how those ETF flows have rippled into your company.
I mean, it is remarkable for both ETH and Bitcoin that they've become so large without access to any institutional capital. That's literally the reverse of what usually happens. And, Bitcoin's $1 trillion, ETH is 300 billion, 400 billion. That's all retail. And so what has happened now is the spigot for traditional finance inflows has opened. And, what's happened? The Bitcoin ETF has been one of the best ETF launches of all time. It's got about half the AUM of the gold ETF. The ETH ETF has followed hot on its heels, and it's getting, on some days this week, more flows than the Bitcoin ETF. And so the market is bifurcated into ETH and Bitcoin. They're getting all the TradFi inflows, and then the rest of the market are competing for these retail inflows that are still in crypto, and those are huge flows. On the day that Nikkei crashed, the crypto exchanges traded more volume than the stock market. So it just gives you an idea of both how large the TradFi inflows are, but also how big the crypto endogenous market is. And it's a global market. It's accessible by far more people than are, have access to the stock market. And that's just a bullish tailwind for the whole industry.
So I was digging into all those 13F filings, getting my quarterly look at what the banks and hedge funds have in terms of exposure to these to the spot Bitcoin ETFs. Ether started trading in July, so we're not seeing that reflected in those filings just yet. But I was actually kind of surprised. Some of the players who got in during Q1 were paring back their positions in Q2. We saw Goldman jump in to the tune of $400 or so million. A lot of these banks, of course, this is a reflection of what their wealth management clients are asking for. Mm-hmm. And then with the hedge funds, I'm not seeing huge positions here. Are we going to see the dam break at some point? Are we going to start to see more blockbuster flows? And why do you think it is that, for the most part, institutions have been relatively moderate in the positions that they're taking in these new spot crypto funds?
So the big positions you see, and I think Millennium had almost $1 billion of the Bitcoin ETF in its book.
Down from $2 billion in Q1, though.
Down from $2 billion. But my assumption is that they're putting on what's called, the carry trade. And people have seen the yen carry trade, but there is a similar thing where Bitcoin in the future is more expensive than Bitcoin in present day. And so there's an arb to be had there if you can put on the trade correctly. But you do see people like the investment board of the Wisconsin State Pension that has upped their Bitcoin allocation. And this is just the start of these flows. And I don't expect the pod shops to put on a big Bitcoin long. It feels like that's a pretty good way to lose your job if you're working at that type of place. But the high net worths that are at these large investment banks, prime brokerages, those are probably going to be coming online in the next few months. And then I think people are going to generally look at Bitcoin and then look at ETH and say, is this the same trade? And can we just do this again? And I think more and more people are going to have a 50-50 Bitcoin and ETH allocation going forward.
I'd be remiss not to ask you before you leave about all-time highs, price moves. Are you seeing Bitcoin perhaps surpassing that high that we saw it reach above $73,000 in March? Or where do you see prices heading for the two top crypto coins before the end of the year?
Before the end of the year, it's hard to know. But Bitcoin is worth 5% of what gold is worth, and it's more popular with young people. It's more popular with people overseas, and the ETF has half the AUM of the gold ETF. And so, should it be worth 5%? Probably not. It probably should be worth 20 or 30%, but that's still multiples from here. And I think ETH and Bitcoin are just assets that appeal to people who are emerging investors in the stock market, and it's going to look a lot different than what the older generations, the boomers, want to invest in, and that's going to be a trend that lasts for decades.
Okay, that's all we have for this week, but if you're looking for even more, Crypto World's Con O's took a deep dive into how scammers spend months befriending their victims in an effort to steal their life savings through highly convincing fake investment apps, and how blockchain analytics firms like Chainalysis track the stolen funds down. Be sure to head over to youtube.com/CNBC Sunday at noon Eastern to check it out. We'll be back here again on Monday. See you then.